Family and fellow soldiers, I'm the Professor, and this is the Moment of Truth. In case you hadn't heard, there's a niche bank called Silicon Valley Bank out in California, and they have just gone belly up. I'm sure that practically all of you have heard about the fall of Silicon Valley Bank by now. This is not going to turn into a crappy CNBC segment, I promise. But looking at this case, there were some things that I wanted to say about it because I got a little bit of a different take on it than you might have expected. Now, as is always the case whenever some bank goes belly up, it's pretty complex what caused their fall. But from what I've been able to glean, this is pretty much how it happened. Long story short, a lot of startup tech firms in California banked with SVB. In the last few years, especially after the pandemic hit, a lot of venture capitalists were investing in those tech firms. As a result, SVB suddenly had a torrent of cash coming in. Of course, being a bank, they make their money off of investing their depositors' money, not sitting on it, so they began looking around for things that they could invest in. They chose to put the money into long-term securities, whose value doesn't change with the market, which is fine when interest rates are low, which they were, but when interest rates are raised, as they recently have been, those long-term securities suddenly lose a lot of value. To counter this loss, SVB sold $21 billion in bonds, and worse than that, they had to do it at a loss, which put a hole in their balance sheet. They attempted to plug the hole last Wednesday by asking their investors if they could help them to raise $2.25 billion. This impromptu fundraising effort by SVB failed, which meant that SVB didn't have enough money to cover their depositors' accounts in the unlikely event that a number of them suddenly wanted to make withdrawals. The stock for SVB began to fall immediately and kept falling into the weekend. There had already been some SVB customers who had withdrawn their money, but the final straw came when some of SVB's venture capitalist customers read from a trusted online newsletter that the bank may not be as solid as they all thought. So some of the big customers began to withdraw their money, and that's when the word got out, especially on Twitter. And before long, there came the surge of customers who were all trying to get their money out of the bank immediately, both tech companies and regular banking customers. SBV, like most banks, would have been fine if only a few people had wanted to get their money out. But no bank can survive a run, which is when people panic and they all want to take their money out of the bank at the exact same time. Black folks by and large won't be affected by this, at least not directly. However, if you work for one of the firms who relied on SVB to help them meet payroll, well, that's a different story. SVB has some really big tech companies who bank, or is it banked, with them. And these guys talk. Word of mouth is what caused SVB's rapid rise, and that's great when business is good, but if things go south, that same dynamic means everyone will dump your bank in a heartbeat, which is exactly what happened. The Treasury Secretary has said the government won't be bailing SBV out. However, Elon Musk is attention whoring again, claiming that he's open to the idea of buying SVB. Now, considering that it was his platform that had a lot to do with crashing that bank, I'm sure he's probably proud of it. When something like this happens, a lot of people want to piggyback on it and try to get themselves a quickie headline. Now, what's being widely reported as the most likely source for this depositor run on the bank was a tweet by a guy named Bern Hobart. He has an online newsletter which is apparently read by a lot of venture capitalists. So when he tweeted on Saturday that Silicon Valley Bank was technically insolvent months ago and hideously overleveraged today, the same people who talked to one another about how great SVB was were now saying to jump ship. There's also talk about billionaire investor Peter Thiel and how he had withdrawn all of his hedge fund money from SVB on Thursday morning. That was mere hours after the Wednesday call when SVB had told investors that the bank needed to raise $2.25 billion to shore up its balance sheet. And this isn't even the first time that Thiel's name has been associated with an instance like this.
And finally, Bloomberg reported that billionaire and venture capitalist Peter Thiel had his companies pull their funds from SVB this week. Do we know what kind of role that played in all this?
Well, Peter Thiel is an incredibly influential figure in Silicon Valley. And right now, there's a lot of finger pointing going on about what caused this bank run on SVB. SVB. Peter Thiel, is reported by Bloomberg, and his founders fund pulled their money out by Thursday and encouraged his companies to pull their money out as well. Well, word spreads quickly in the Valley, right? You have group chats, you have Slacks, people are talking, and we saw tens of billions of dollars of money being withdrawn from SVB, which basically was a kiss of death and caused California regulators to shut it down. You might remember that Peter Thiel was a big proponent of crypto. He was very, very bullish on Bitcoin. He attacked the critics of Bitcoin as enemies. Meanwhile, Peter Thiel and his founders fund sold their crypto and made billions of dollars in the profit. So people in the Valley know that Peter Thiel is very skilled at moving his billions of dollars to safe harbor when there's volatility in the market.
Now, why am I not surprised that he's one of the crypto bros? Well, he was until he found it convenient to turn tail on that one too, and he coincidentally was able to get out before everyone else even knew what was coming. Funny how these billionaire investors always seem to know what's coming long before everyone else, but I'm sure they're just really lucky, or they're just really smart. Right? But the scuttlebutt is that all it took to sink one of the largest and most important banks in the country was a social media post. Sure, there's significantly more to it than that, but my point is that there's simply no substitute for having people who listen to what you say and act on it. This was an instance of a lot of people who were getting on code very quickly. Now, what needs to be remembered is that if fewer people had withdrawn their money, SVB would still be in business. As it stands, now the feds are desperately trying to find a buyer for them. Tragic as this was for the companies that just took one in the back, as black people, we need this kind of coherence and influence among one another when it comes to our own interests. Because the same forces that tore SVB apart could also work in our favor if we applied them. Not just for investing, but for political leverage and a whole host of other things. There's power in numbers. Particularly when those numbers all move at the same time. And you can take that to the bank. Good day, and be one. I'd like to take a moment to mention some of our contributors. Chaz, CC Henry, Eve, Miss Debbie, and Onan Smith. Salute to them and thank you to everyone for listening, liking, and sharing this message. Black empowerment only exists because of you.